Hello, everyone. My name is Igor Tomych, and today I'm talking with the different guests at Finovate Spring in London. So I would like to welcome Joel Blake, who is conducting an interview with us today.
Fantastic, great to see you.
Yes, same for me, and thank you for joining. Today we have special questions for you. We based on the speakership that you give on the panel today. So from your work with banks and fintechs, what's the first real indicator that a prospective partnership will thrive rather than falter?
I think one of the first key indicators is about the transparency between those partnerships.
Yeah.
I think we sometimes forget as fintechs that banks' really key priority in most cases is about managing risk, right? It's risk internally and risk externally. And so they have to manage that risk in terms of the partnerships that they have. But the level of risk might be different as well. So for many banks, it's about that kind of regulatory risk and that sense of compliance and making sure that they have the right type of partnerships and compliance in place with their kind of partners. But for fintechs, it might be about speed.
Yeah.
You know, they need scale, they need speed. That's why they want to partner in the first place. So there has to be that kind of transparency and understanding of what risks both sides are having to deal with and how you're going to work through that together to make sure that partnership is solid.
Yeah, that's true. And a lot of examples when the tier one banks, they partnering with the fintechs ecosystem and they managing the risk and they kind of have sometimes a little bit shifted priorities. But that's a good example for thriving partnership. So the second one is about the data ownership and governance with partnering with the fintechs. So where do you see the biggest mistakes made? Like what should we
Where do we start, right?
Yeah.
There's a lot of things in that one there. But I think for me, in my experience as both as a fintech owner, but also my background in governance work, what I found was this kind of marriage between what they believe the effective governance frameworks are,
No.
and from a data perspective, AI governance.
Yeah.
And sometimes, particularly with fintechs, they want to scale very, very quickly.
Yeah.
And so that rapid iteration might not always mean that their governance frameworks are keeping up to speed at the same time. But in this world where data is king,
Yeah.
or more specifically, the insight that you derive from data is actually king, being able to have the right kind of governance frameworks to kind of manage that data and manage how that data is used and the actual insight you extract from that and making sure that's used effectively across the whole organization. That's what I think is the real challenge, because we get so sucked into this whole thing about data, we forget that people want to make data useful.
Data-driven decisions, but not data-driven data.
100%, because, bad data in, you're going to get bad report out, right?
Yeah.
Or bad information out. If you've got good data coming in, and there's a really good reason around that data coming in, and there's effective governance around that, then the results that you'll get will be actionable. I think as a subset to that though, Igor, what I would also say is that you've got to make sure that that kind of insight and governance view is shared across the organization. It is not just the role of IT or the technology or the innovation department.
But that's sometimes which people are, I think, quite missing in a shift from pillar-based companies or banks into the fintechs, because the process is around the business process, not the team or a specific technology. So when we think about the data, it's quite tailored to the business process. So it should be an accountability for each step happening. Even think about the onboarding, like onboarding starts with the collecting the specific phone numbers or emails, understanding who are those people, what are the intents, how we're making sure that they properly assess for onboarding, and in the end, maybe open an account with us.
But totally correct. But let's not forget, it's not just a fintech problem either.
Yeah.
On the other side of the fence, you've got the larger organizations who might have their own legacy technologies, their own legacy ways of working, who are finding it difficult to adapt to the pace of change.
Yeah.
And so the level of risk, as we mentioned earlier, is going to be even higher. So the data governance has to be much more stringent and higher too. So that balance again is so important.
Yeah. Thank you. It's really insightful. And the next one is looking for the next 5 years. Do you believe that the real power in banking or in banking partnership will come from open interoperable marketplaces or from closed bilateral deals?
Controversially, I think it's only about interoperable marketplaces. We talked about data, we talked about governance, but more importantly, we've got to talk about the future.
Yep.
None of us know what the future holds. In fact, certainly in my network, a lot of my peers are now working on really clear 90-day cycles because the volatility in the market means it's so difficult to So really think about 3 to 5 years.
Yep.
But what I think is important for businesses to also remember is that it's okay to have a 5-year plan, but make sure it's flexible
Yeah. Adjust.
than ever before. And make sure your KPIs are understood and you have very clear accountability of those KPIs throughout the organization. Because when it comes to these interoperable markets, it also means that, well, there's two things. The good thing about that is that that level of collaboration in those interoperable markets means that it's 1 + 1 = 3.
Yeah, yeah.
So there's so much opportunity that's available. But it also can highlight 1 + 1 = -3, because it can also highlight a lot of new risks that no one even thought about. And so we have to make sure that that interoperability is very much aligned from the start, and that flexibility and adaptability is also built into that process. Even in our own business, we've built a market terminal for the private credit market, and that the level of data that we bring in is interoperable by nature. All the different lenders and funds will share each other's information, anonymously and inclusively and securely. But at the same time, it still pulls up insight that each organization has to consider in their own way. But they cannot operate in isolation anymore. The days of being opaque and not being transparent about what you do are gone. And so for fintechs out there, and for large organizations in particular, but for fintechs who want to become growing, scaling organizations, you really got to build in that strategy in terms of that long-term growth. And the next 3 to 5 years are going to force us to have to do that, and do that in new ways that we probably don't even know yet. So being fleet of foot, being adaptable is key.
Yep. Thank you for all those insights and really fruitful discussion.
That's my pleasure. Thank you.
Thank you.